Everybody, welcome to BossBlunts Think Tank. Let's hop on in here. Let's see if these fucking degenerates are saying anything inappropriate. Alright, boys. You guys ready to move down?
Yeah.
Hey, cue the music.
Cue the
Honey, I fucking missed you.
music. Are you sure? Should I play the song? I don't know, man. I don't know if I
Oh,
should play
fuck
the
yeah,
song.
dude. You have to.
Should I play the song?
You should play that song. It's going down for real.
I guess.
Ain't that shit?
Blow some fucking eardrums.
Let's go, guys. So goddamn rich. Let's move down, you fucks.
Get everybody in the stuff together. Okay, 3, 2, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich.
Let's fucking go!
Dog, this my ticket's so fucking
You're
jacked.
an original,
Hey,
aren't
yelling,
you?
give me my fucking money. With my motherfucking money, Janet yelling. Get the
Time to get
goddamn
paid.
money out.
You guys hear me real quick?
Yep.
Great. The bounty letter.
You guys got your glizzy grips ready?
We're gonna be so fucking rich. Get the goddamn money printer out. Wow. Wow. God, I love that obnoxious fucking song. What the hell's going on, everybody? It's good to see you. Ferrari boy, my
It's a
man.
catchy tune, man.
Welcome to the Think Tank. Appreciate your support, everybody. We're just getting started. We got all sorts of fun shit to talk about tonight. I don't even know where to begin. But I think Deutsche Bank headquarters getting raided by the fucking feds is a pretty good spot to start. You can't beat that, huh?
Hell yeah.
Oh man! Did somebody say light the blunt? Excuse me while I pack a bowl. 'Cause, I'm out of blunts for now. I gotta swing by the store here, grab some more. For now, I'll get the Sherlock going, and we'll keep it rocking and rolling. Look at this. 170 regulators descended on Deutsche Bank's global headquarters in Germany on Friday after the financial giant alerted authorities about a potential money laundering case.
Oh.
Uh-oh. The stock was trading nearly 4% lower on the news. That's great. The raid comes as Deutsche Bank redoubled its compliance efforts and following a massive restructuring effort in which 18,000 people were fired following years of regulatory run-ins and disappointing earnings. Deutsche Bank posted 2 consecutive years of profits, and last year the bank saw its most profitable year in a decade. I guess it's pretty easy to be very profitable when you're laundering shitloads of money, huh? Last month, Deutsche Bank fired 4 New York employees, including a number of top executives, after a visit to a strip club was charged to a company card. Keep it classy. Keep it classy, Deutsche Bank.
That reminded me of something. Wolf of Wall Street.
Wolf of Wall Street? Hey, that
Yeah.
sounds about right. That sounds about right. Oh, that's good fucking news if I've ever heard it. Deutsche Bank, get them the fuck out of here. Speaking of, however, what's not good news is housing is fucked. Housing is practically completely fucked. Foreclosures are up 181% year over year. You may ask why. Because those eviction moratoriums and forbearances on mortgages are now due. It's come time to pay the piper, right, guys?
Oh yeah.
Yeah, I'm right.
Appreciate you, Nightmare Macaw. Thanks for your support. You know what? A few good things that I wanted to share with you guys right off the bat. It's been a crazy week on the stock markets, and I think a lot of people are aware of that. This sideways trading action, this fake markets, this slow burn by the Federal Reserve is an absolute nightmare. We're never going to be able to get an actual soft landing here. Take a look at what happens. Let me scoot this over a little bit so you can see it better. Take a look at this chart if you can. This is the VIX in purple, and you've got the Japanese yen in orange. As you can see, the VIX, for the most part, always follows the yen. Look at what happened. Look at this shit, bro. Look at where the VIX and the yen were back in February and March of 2020. They were in the 80s. 80s. The volatility index was in the fucking 80s. And in case you don't understand charts, the purple line has to catch up to the yellow line. Does that make sense? For the people that like Legos and don't understand the stock market?
I like the Legos.
I love Legos. We got another one here for you too, since we're looking at pretty colors. Look at this one. More pretty colors for you. Hang on one second, I got even more for you.
Dude, man, even UVXY up over 1,200 in 2020, man.
Yeah, the difference is, well, the question is how many people are going to buy the UVXY from you when it comes time to sell. Whereas the volatility index is an index that's going to need to be purchased back by the Federal Reserve, for example, because they have over $2.5 trillion in short positions that they hold on the volatility. What do we have here? A situation where the VIX is being...
The Japanese yen.
No, this is... Here, check it out. This is the yen, and this is the Chinese yuan.
Oh, right.
Yeah, they look almost the same. I know, that's why it's a little hard to tell. But yeah, this is the CNH. So it's... What does that mean? That means that when the United States dollar and the stock market take a shit, people put their money in other asset classes and other fiats, such as the Japanese yen and the Chinese yuan, and they start to run. What happens after? The market crashes, and the volatility index catches up and surpasses. Catches up and surpasses. See? every fucking time. Check this out. This is the Dow Jones Industrial Average. You know, it's basically a short gamma squeeze and then a breakdown each time. You know, Vietnam protests, breakdown. Tet offensive, gamma squeeze. You know, you've got the Dow Jones Industrial Average here in like, let's call it purplish or sky blue. And then you've got another one here, U.S. Fed's fund rate, which is more of a, kind of like a robin's egg blue, kind of a lighter color. Check out the Democratic National Convention, Nixon's presidency, and then tanking of the Dow Jones all the way to Penn Central bankruptcy. Right, same thing here with Martin Luther King's assassination and the tanking of the federal funds rate. Here, all the way to, oh, look at the end of Bretton Woods. Every time the Fed tightens, they bring this down. What happened when we had the Nixon impeachment here? All the way down to the Franklin National bankruptcy. Here's when New York City filed for bankruptcy, a nice shock to the system. And all of this here on the upward trend in the 70s, for those of you that are unaware, this is from the 66 through 77, is an upwards and downwards momentum that you've got here. This is the Dow Jones Industrial versus the federal funds rate. As you can see, they always fucking follow each other. And even then, the federal funds rate started to creep down and the Dow Jones followed. Right now, what are you seeing? The federal funds rate creeping down. The Dow Jones is still elevated because of an asset sheet that is unsustainable and consists of a lot of bullshit like mortgage-backed securities. That's why. Where the fuck are we at here? Sorry, I lost my place. I lost my charts. Meanwhile, we have lots of people that are completely supportive of giving billions and billions of dollars over to Ukraine. Check this out. Let's get rid of this shit over here. Joe Biden is asking for $33 billion in additional aid.
No.
No shit. No is right. $20 billion for quote unquote security and military assistance, $8.5 billion for economic aid, and $3 billion for humanitarian assistance. Is that the same humanitarian assistance that NATO used to bomb the shit out of my dad's country, Yugoslavia, which no longer exists?
It's the same humanitarian group that watched the Rwandan genocide happen.
That's questionable. Did they watch? Yes, they watch a lot of things happen. Does America step in and make a difference? Only when it really matters. Only when it really matters. And
I think the fact of the matter is that we already seen enough Biden inflation as it is. We don't need any more with this $33 billion.
It's just another excuse to inflate more.
Absolutely true. Let's go. We got the think tank in full swing. But giving another $33 billion to Ukraine right now is an absolute ridiculous way. We have 1.2 million children suffering from lead poisoning here and now in America. But we're giving away all this money at the cost of what? The cost of creating further hyperinflation. You and I have to pay for this shit. You and I, and our children, and our children's children. I'm not okay with that. I'm not okay with that at all. And currently Biden is trying to pass $10,000 in student loan forgiveness. Why? So he can ask millennials to vote for him again under the guise of offering more student loan forgiveness in the past. Is he going to? Absolutely fucking not. No, he's not going to ask for more forgiveness. Look at what happened to the inflation rate. This is 2021 going into 2022. We've been calling inflation out of control since it was at 5.4%. Why? Because it's obvious that it was out of control. Right? Now, all of us here were able to see it. We were able to feel it. We could sense it coming. Because it was happening every single day, day in and day out, on your energy bill, on your grocery bill, on your gas bill, everything that we touch, the food and clothes that we buy at the store, everything was just way out of control, and we knew it wasn't going to slow down. What do we have? We have Jerome Powell saying we want inflation to run a little bit higher than it's been averaging in the last quarter century. It's all transitory, he said. Transitory. Fuck, what the fuck is transitory about it? There's nothing temporary or transitory about the Federal Reserve's inflation here.
Come on, man. Come on.
He said that was when inflation was still at a supposed 4.2%. And then he said, as these transitory supply effects abate, inflation is expected to drop back toward our longer run goal, and the median inflation projection falls from 3.4 to 2.1 this year, or next year. Our new framework for monetary policy emphasizes the importance of having well-anchored inflation expectations. How'd that work out for him in June of 2021? Let's see. He said, everything's fine. It's working the way we expected it to. Why did he say that? Because he knew that inflation was going to continue to run hotter and hotter and hotter. This is the Federal Reserve's goal, is to inflate you out of a house. It's to inflate you out of a job even. Because if it costs X amount to drive to work and get lunch and drive back home and transit time, and the government can offer you unemployment or other basic income, or you could do a gig such as Uber Eats, for example, and make just as much money or almost as much and do it in less time, why would you go to continue to work the same job? This increases unemployment, brings Americans out of the workforce, fucks up supply and demand even worse. It truly does skew supply and demand in an even worse outcome than it currently is. And it causes people to lose their homes and apartments and credit and savings. It continued to run rampant, right? He kept saying transitory, transitory, transitory. Then it comes out, many find it counterintuitive that the Fed would want to push up inflation. It is counterintuitive, but it makes sense to them. Because they don't care about our well-being. The Federal Reserve and the government don't care if we go broke. They're happier. They have more control and more power over we the people if you're required and forced and begging them to take out more money and to sign up for their new digital dollar in order to get whatever sort of stimulus they want to offer or whatever kind of student loan forgiveness they want to offer. Are you starting to see the way that this is going to work? They continue to say our policy is well positioned to manage a range of plausible outcomes at 6.3%. And then in November of 2021, he said inflation is coming higher than expected. No shit. No shit. Then at 6.8%, he says the word transitory has different meanings to different people. It's a confusing word that needs to be retired. Oh, so it's not temporary. It's not a fancy way of saying temporary. What we're learning is it's just taking much longer, and that raises the risk that high inflation will be more persistent. Oh, that was only at 7.6% in February. Don't forget. What do you say at 8.5%? We're not expecting near-term progress on inflation. Translation into English, inflation is not going to get better anytime soon. That's what we're not expecting near-term progress on inflation means. Get ready, plant your fucking gardens, buy some food, buy some tangibles, invest your money wisely, because times are about to get tough.
Everybody rise.
Yeah, together we rise. Together we rise. As Pantheon, if you're in here, hop on in the chat, brother.
Hey, I just Googled what transitory means.
Yeah, go
It
ahead.
means not permanent.
Exactly. Temporary, not permanent, right?
Yeah.
Wow, that's fancy.
It doesn't mean different thing to the difference.
It's got one meaning, right? That was pretty easy.
Yeah.
That was pretty easy. So yeah, Jerome Powell, this fucking clown, does not deserve to be renominated. I'll say that much. Oh, look at these guys. Look at the Hang Seng at the same place as it was in 2016, and not even halfway to where it was in 2008. Pantheon, jump on in here in the think tank, brother, if you can. I understand if you can't, if you're out and about. But look at this hot fucking mess. The Hang Seng being at these levels, it's absurd. It's absurd. And why is that happening? You know what? Before we get there, in case you're unaware, one of the reasons why I am warning people to buy food and canned goods is because there is avian flu, right? And they're killing chickens by the thousands. Herds and herds of chickens. If one chicken has the bird flu and there's 80,000 chickens in the flock, they kill them all. It keeps happening all around the country. What else? 16 fires have broken out at food processing plants in the last several weeks, impacting the nation's supply of beef and poultry.
Oh, what a coincidence.
I wonder if that fire was started by the same people that started the TD Ameritrade building fire in Bartlett, Illinois. Huh, Cash?
Oh, yeah, maybe.
That same building that was run by a guy that used to work at Citadel Information Management, but now
Oh, yeah.
owns Access Corp.
Allegedly.
Yeah, allegedly. That's a good point. Look at this shit. The Hang Seng's got a long way to go. And our friend, Dr. Marco Metzler of Deutsche Market Screening Agency, is going to do them a big favor and help them figure out how to reach the bottom. Dr. Marco Metzler has finally come out and announced some new information about his Evergrande bond situation. Check this out. Let me get this up for you guys. Oh, but I can't forget, while I'm looking for that, for those of you that didn't know, Swiss National Bank has just posted a loss of $34 billion. $34 billion with a B, as in bitch.
God.
Not to mention, not only are they a bank, but they're a central bank. What does that tell you? They take the deposits from people on 401ks and investments and put them into equities and garbage real estate developers like those in China, like Evergrande and Modern Land. And Deutsche Market Screening Agency filed a court petition. Deutsche Market Screening Agency filed against Evergrande in order to get their bond paid. Evergrande had 21 days to respond, and they failed to respond. What does this mean? Dr. Marco tells us, update on China Evergrande Group defaults as mass media do not cover it at all anymore. You guys notice this? It's not on Bloomberg, Reuters, CNBC. You don't hear about Evergrande anymore. Isn't that convenient? Now that they already told us about it, people have forgotten about it, it's time to make things happen. Dr. Marco Metzler says, as statutory demand is unpaid after 21 days, the statutory demand is their demand for payment via the court system, DMSA will now continue in filing a wind-up petition. This means the court has a few weeks, about 2 to 3 weeks on average, sometimes it takes less, sometimes it takes longer, to review the winding up petition. It's when a business is closing down, it's wound up, not wound down, so don't get them confused. So a wind up of a company is a closure. And a winding up petition is a petition filed through the Grand Cayman Islands court system via an attorney due to a statutory demand that was unpaid by China Evergrande Group. What does this mean? Some of you may be aware that China Evergrande Group, as well as 36 other developers, have been halted from trading in Hong Kong. Lots of them. Why did this happen? Well, because they've been cooking the books for so long that they have been unable to provide clean books for this year. Therefore, they've been removed from the stock market. Evergrande, Sunac, Modern Land, Logan Group, R&F Properties, Genting HK, Shimao, Kaiser, Aoyuan, Agile Group, and the list just goes on. All of those firms were halted from trading on the Hong Kong and American stock markets. And every time I open up my brokerage apps and see that Evergrande is suspended and has been suspended from trading and is still sitting there, makes me absolutely fucking furious, even though their stock price is a joke. It's somewhere like around 35 cents US dollars. They're a piece of shit penny stock at this point. Dr. Marco Metzler is doing the right thing here by fighting them in court, using his own money to fight these crooks that have been committing bankruptcy fraud and using money that belongs to Chinese bondholders and offshore bondholders in order to line their pockets, finish projects, and give them away to Chinese Communist Party state officials and businesses. It's a complete scam. And when this happens, much like we've seen in the past, you're going to see a situation where stocks like AMC and GameStop run 1,000, 2,000, 3,000%. And Ocugen and BioNano run 5,200% and 2,800%. You know, you're going to see all sorts of situations like this where Senseonics runs 1,300%. Okay, and Guardian Health runs 500%. You name it. You're going to see 1,200% movements, 1,700% movements on Sundial, 1,800% movements on Naked Brands.
We're gonna be rich, boss.
We're going to be so fucking rich.
Oh man.
It's going to be ridiculous.
Oh man, so goddamn rich. And it's only the beginning.
Yeah, pretty much. This is Dr. Marco Metzler. As you guys know, he's been fighting Evergrande for quite a while now. And he's doing a great job. You know, I'm incredibly proud and happy to see that he's doing this. And he continues to push the envelope and fight against a corrupt Chinese developer and corrupt monetary financial system that needs to be, well, let's just put it this way, reset. Let's give him an update directly from directly from Dr. Marco Metzler. Trading at the Hong Kong Stock Exchange was suspended on Monday, March 21st, pending an announcement from the company. And they're still suspended as of today. Evergrande defaulted on one of their biggest international bonds of over $2.1 billion, and no one seems to care. Why does nobody care, bro? Somebody, anybody. Why do you think nobody seems to care that these companies have defaulted on billions of dollars in bonds?
It's not time to release the information.
Bingo, my man Pantheon.
How
Jumps
you doing,
in on
boss?
here. Doing great, brother. Thank you for stopping in.
When the government acts, that's when it's reactive and it's too late, and everyone has prepared at their side and they're ready for us, the little people, the retail crowd, the dumb money to find out. That's exactly how the timing works, but this time we're ahead of the curve.
Because we're actually keeping an eye on this shit, right? We've been watching this for months.
This has been all over the think tank for a long time for people that have been around, and those that aren't should really consider checking it out, man. Because the actions of the banks, the hedge funds, companies defaulting, their default rating being delayed, all of this information is what you can see before we actually get to see the big event take place. It happens every time. This is the precursor.
That's true. That's true. Every single time we have situations like this. Situations like this. We have day after day after day of shitty Chinese developer bonds, real estate bonds, mortgage-backed securities, much like we saw in 2008, much like we're seeing today. It's the slow bleed that happens as they move institutional money out and pensions and 401ks in to these emerging market ETFs that hold all this fucking crap. All these crap funds. Who owns this shit? All of these guys. There are tons of bonds. Here's one, for example. Here's one of Evergrande's tickers, and BlackRock's got almost 31 million shares. And at the time of this, at 6/30/2021, they have more shares now. But at the time they had increased over 3 million shares in that quarter. And Vanguard owned at that time 44.5 million shares of Evergrande. Why? Because the shitty Chinese junk bonds cost them 10 cents, 15 cents on the dollar. But they maintain their full notional value as margin collateral. That means for 15 cents, I get $1 worth of margin. And it's not even my 15 cents I'm putting in there. It's your fucking mom's pension's 15 cents. It's your dad's 401k. It's our military's thrift savings plans. BlackRock owns over 40 million shares of AMC alone. There are many meme stocks on the market. AMC, GameStop, BBIG, Sundial, you name it. I could name 100 probably right now. But BlackRock is the whale that is helping Citadel get away with their infinite short glitch. I don't know the person who originally posted this, but this is information we already knew. However, they did do a great post on Reddit, but unfortunately I don't happen to have his name available right now. But you can see BlackRock is long on AMC. They're making a lot of money borrowing these shares out. Vanguard as well. BlackRock and Vanguard own a shitload of shitty Chinese collateral. It's here. Vanguard, BlackRock, State Street. 3 of the top companies that are shorting AMC and other stocks. It's really a quite simple term. What else are they doing? BlackRock is using the Federal Reserve's special purpose vehicle programs to buy Asian junk bonds via these emerging market exchange traded funds. They're abusing the investments for margin collateral to finance other global hedge activities. Right? We've been discussing this now with Dr. Metzler and other people in the community for months. We found out that Ashmore Group and UBS and all these other cats have been buying these up like crazy. What else do we know? BlackRock's portfolio had 31.3 million shares in Evergrande bonds between January and August of 2021. 1% of its portfolio assets were in Evergrande. Between January and July, HSBC increased its holdings by a full 40%. The UBS Asian High Yield Bond Fund reduced its exposure by almost nothing, but the number of shares rose by 25% in May. This is Shimao, for example. It's the same exact thing as the Evergrande situation, but it still has 100% of the notional value. A lot of them are in much worse shape, especially since that picture is pretty old. We had Chinese collateral cause previous issues. On November 12th, 2020, President Donald Trump signed an Executive Order 13959, and that caused Chinese military companies that were on this list of over 30 companies to become useless garbage collateral on January 28th. That caused AMC and GameStop to skyrocket. One second, I'm going to find something for you. Here you go. That's on whitehouse.gov. On June, sorry, let's put it this way. So you saw on January 28th what happened with this executive order. Let me get these out of my screen here.
Hey, boss, while you're pulling that up, one of the biggest risks hedge funds take when times start getting tough like this is illiquidity. Assets that can't be easily quickly sold and turned over. And these toxic assets you're talking about that'll be affected by this executive order fall exactly into that category. Who the hell would want to buy them?
Exactly. But they don't seem to care because it's not our money. It's not their money, right? It's our money.
That's right.
What else? This was extended through May 27th, guys. And then when it was extended on it was extended through May 27th, 2021. Same executive order 13959. And it was amended by executive order 13974 through 9:30 a.m. Eastern Daylight Time on May 27th. However, there was already delta hedging happening and gamma squeezing, and because of guys like Gil, I believe that's what his name, Deep Fucking Value, DFE, being in court in front of Congress, being watched by millions of Americans, talking about GameStop and the run up in the price, and if he would buy more. And his answer was, I absolutely would buy more today at these prices. That caused a lot of people in January 27th, 28th to buy GameStop and AMC and other meme stocks, and they shot up through the roof. There are rumors that the White House on January 28th called broker dealers and market makers like Virtue and Citadel and Robinhood and told them to pull the buy button. Then, through the extension of Executive Order 13974, this collateral existed through May 27th, 2021. It went bust. They took away all that Chinese military company collateral. Granted, that was only about 30 companies. And it doesn't include any of the real estate companies like Evergrande or Sunac or Shimao, Modern Land, Fantasia, none of them. Just CCP military-related companies. On June 3rd, 2021, the day after AMC hit its all-time high of around $78, first thing in the morning, Biden issued this executive order addressing the threat from securities investments that finance certain companies of the People's Republic of China. This amends these two orders in order to give them more time. And what did it do? It adds, it changes the companies a little bit here. Here's all the name of all those Chinese companies: satellite, mobile, nuclear, marine engineer, space, but none of them real estate. Okay, this is just related to the CCP. Let's take a look and look for the date. It's got to be here. There it is. So they made the purchase and sale of these publicly traded securities effective and permitted through midnight, first thing in the morning, 12:01 a.m. on June 3rd, 2022. We are just over a month away, right, guys? Just over a month away from watching the same executive order that fucked hedgies, fucked market makers, and shot AMC and GameStop to the moon, as well as many other stocks that ran right along afterwards. We're about to see that exact same fucking shit happen. June 3rd, 2021, banks and market makers got their collateral back. All of those military companies that we just showed you here, they had all of these companies back on their books, and they were no longer in margin defaults. Therefore, they were able to start shorting the stocks again. That's what brought AMC down from $72 down to $52 in one day. And then the next day it went down further, and the next day after that. Because market makers had the margin to start shorting them again. Easy fucking answer, huh?
Yeah, so we're gonna be rich by executive order.
You're goddamn right. And at the same time, we've got old fucking Yeller
I know you're coming
telling us over and over again
long week of meetings there in
that the
Washington.
United States
World Bank
is working to re-examine the China trade strategy. They're trying to cut trade with China because the United States is well aware that they're going to have to sanction them, that there are already sanctions in place that take effect June 3rd, 2022. And Janet Yellen has come out several times telling people and Chinese companies out in public that this is coming. They're saying it over and over again. All around she said it in front of Congress. She says it on TV. Janet Yellen is telling us everything we need to know. Here's 100 fucking developers that were all suspended because they were cooking the books. Here's 100 more. Not really 100. You get my point, though. I'm exaggerating a little bit. But there were over 100 companies total that were suspended at that time. Now, about this executive order 14032. Something that a lot of people don't know is that it's actually been expanded upon. And there's now even more shit here that we have to be looking out for. Let's take a look here. There's more companies that have been added to this list. An additional about 30 or so companies more were added to the list that were already on it. This occurred on February 16th, 2022, when an amendment to the Weapons of Mass Destruction's Proliferator Sanctions Regulations took place and hit the Federal Register. God damn, we're going to be so fucking rich! That's it. That's the TLDR. That's the fucking TLDR for anybody who's too lazy to pay attention. And now we got Dr. Marco Metzler, whose unpaid statutory demand is about to make Evergrande go bankrupt. Evergrande
What a champion, man.
What a fucking champion is right. They got $600 billion in offshore bonds that we know about. Probably another $600 billion in private loans that we don't know about. Why? Because private loans don't need to be reported as China on a company's asset sheet or books. It allows Evergrande to cook the fucking books. Simple. Dr. Metzler says we have to end this fucking wicked game by finally sending Evergrande Group in an official liquidation process to trigger a de-rating from the rating agencies. These crooked bastards, just like they did in 2008 with Dr. Michael Burry, calling him up, telling him, when are you going to re-rate these shit mortgage-backed securities tranches? You know they're fucking worthless. And they told him, They're not correlated. His answer, what do you mean they're not correlated? They're directly fucking correlated. A few days later, they called him back and said, Dr. Burry, we're able to offer you a buyout on your positions. And he said, you mean you're finally able to give the proper ratings to those mortgage-backed securities, right? And the guy said, I'm not sure I understand. And the Dr. Michael Burry says, don't worry, you don't have to. You've said enough. Because he knew that he was about to be way, way more fucking rich than he previously was. That's the sound of Jerome Powell's fucking money printer printing our fucking money. Meanwhile, he's bailing out all the market makers, the banks, the hedge funds that caused this crisis to happen. If a creditor is owed money via a Cayman Islands company such as Evergrande, and they've tried unsuccessfully to collect, they can file a statutory demand. After 21 days of the statutory demand, the company will be deemed insolvent, and a winding up petition can be filed easily against the company. Dr. Marco Metzler says, as I mentioned in my earlier post, we delivered our statutory demand to Evergrande and the Caymans officially on March 22nd, which you saw right here on this channel where we interviewed Dr. Metzler just a little over a month ago in this regard. And he said, as more than 21 days have passed without payment, we move once again forward with our winding up petition to be filed, having a local liquidator and a local law firm accepting our mandate. We're in. Will China nationalize all real estate developers and bail out Evergrande? Do you think China's yeah, exactly. Exactly, Cash. No. Pantheon, Cash, you guys want to fucking jump in here? Silverback Elmo?
Oh, man. They will never do that, ever. He got them so good.
No, not a chance. The biggest difference in North America when a company defaults, the bondholders get first dibs at the carcass. China is saying, we don't care how you handle things in North America. We're not going to pay that out.
China doesn't give a fuck what happens to America. They want it. Say that again. Say that again for the people in the back.
Yes, their revenge from 08 when we fucked them.
People seem to forget that America fucked China really bad in 2008. I don't think Xi Jinping has forgotten. Not at all. Counselor Murray, thank you very much for your support, brother.
It's not only Pepperidge Farms who remembers.
I think Counselor Murray's going to be rich as fuck. That's what I think. And a lot of people that are invested in AMC and GameStop and other meme stocks, the VIX and other short bets, silver, gold, MMAT, Sundial, you name it. A lot of people are going to be completely fucking broke. They're going to lose their 401k, their thrift savings plan, their pension. A lot of people are going to hurt really bad. And very few of us, very few people, a lot of the people probably watching this right fucking now, in my opinion, are going to be filthy fucking rich. Can't wait to say I told you so. I'm not a financial advisor, and this is not financial advice.
Let's fucking go.
Let's fucking go, bro. I'm ready. I'm ready to squeeze.
Market collapse imminent. Look at the legs. They cannot hold it down forever.
Yep.
Hey, Mark, I have something for you for next year.
Just stop.
Okay, watch gold.
Our next guest saying gold has the potential to go to $1,500 an ounce. Gold is down today, up 6% for the month, though 20% over the past 2 months.
If it trades above last year's high of 1,000 and the world stays the way it is and gets worse, basically it might have one of those parabolic blow-off moves, and they should be involved now, testing the waters instead of chasing it when the whole world's talking about it, in 3 to 6 months from now. Well, last time I was on in December, we did isolate to 6,600 to 6,900 area in the Dow. I think people kind of just don't even want to look anymore, which at this point you really have to look. My call right now is we might have a little bit of a tradable rally here.
Joining us today, Scott Redler, Chief Strategic Officer and Technical Trader with T3Live.com. 66 to 68 or somewhere. We could see a bottom. We did.
This guy was calling it. He was calling it all through 2008 before the market crashed. He called the fucking market was crashing, and it happened. After the market crashed and gold was squeezing, he called it, and it fucking happened. He called the Dow Jones, and it fucking happened. Why? Because these things are visible. If you know where to look, you know where to fucking check all the charts. You can see the COMEX. You can see a lot of the synthetics and naked shorts and manipulation of the options chain. You can see the married puts, the divorced puts, and the options chain right now from May 25th through June 3rd on AMC and GameStop is almost completely wiped. Cash, why don't you tell me, why would the market makers wipe out all the open interest from the end of May to the beginning of June of 2022?
Oh man, they want to front run the option chain. You know that.
Oh, I do, but I wanted you to tell them. I wanted you to tell everybody listening right now exactly why.
They're greedy as fuck.
Because they're greedy as fuck. These are going to be re-implemented June 3rd, 2022. 65 plus Chinese military companies will be wiped off the fucking market. That's more than double the number that were affecting the January 28th and May 27th, 2021 run-ups of AMC and GameStop. In addition, we've got rampant hyperinflation, ridiculous amounts of hyperinflation. A Federal Reserve that can no longer quantitative ease. They are currently tapering and trying to sell off mortgage-backed securities. Meanwhile, all the banks that they're trying to sell mortgage-backed securities are also trying to unload mortgage-backed securities by the billions and trillions of dollars. About 3 trillion a piece, actually. 3 trillion for the Fed.
The TSPs are offline.
Oh, yeah. Did we forget to mention that? Pantheon, my friend, are you still with us?
Yeah, I'm here, brother.
Now, I've had some people that have been skeptical and have been telling us that, we don't understand the way that these thrift savings plans work. And I would beg to differ. Would you mind briefly explaining the way that this, TSP works, what this thrift savings plan is basically in short, and how it causes, what the issue is with the fact that it will not be available for a matter of about 3 weeks. Which weeks? May 16th through the first week of June, right?
That's right. You can't do any withdrawals starting May 16th, starting May 26th to June 7th. You can't make any changes to the investments within the plan, but it still will reflect all of the actual conditions of the market and how those investments within the plan either increase or decrease. So if there's something really good happening, you're not going to be able to take advantage of that. Now, you're not buying individual stocks per se, but you're buying funds. You're buying, like, for example, the BlackRock 30, the BlackRock 40, the retirement plans. Those will be invested in index funds that will have ETFs that will contain some of these meme stocks that we are beautifully invested in. And when they pop, you won't have the ability to take advantage of that and get out before it comes down. If it were squeezing at that time, we're not calling that. But if something negative were to happen, something terrible, something like the market's tanking, something like we've got on June 2nd, there's the GME vote for the stockholder dividend split. of shares. You've also got the next day, then back-to-back days. You've got the executive order 14032. Boss is very well laid out for everybody, right? And during that exact time frame is the time frame you will not have a chance after May 26 to make any changes within the plan. And we're not trying to put fear or FUD into anyone's head, but if you know anybody with the TSP plan who may be invested, please have them take a look at what's in the plan. What is it that they're actually invested in, which isn't an available piece of information? And just consider the fact, if you are unable for the stretch of May 26th to June 7th, something good or bad were to happen to your investment, you will not have access to it. Are you in the right thing? Are you in the thing that makes you comfortable? Because it will reflect market conditions during that time, which coincidentally, as Cash and Boss have beautifully pointed out, is when the options chain is completely dead. The last week of May, first week of June. These things don't all become coincidences. At some point, you have to start saying, maybe it's time to prepare, right? Just prepare, be aware, understand.
This can't be coincidental, in my opinion. You can look at this small portion of this video. You can put your tinfoil hat on for this part of the video and say, if we know the executive order that almost destroyed the markets in January and May of last year is coming into effect June 3rd, 2022, are happening, and everything else that we're seeing, such as GDP estimates collapsing, bond markets in an 800-year all-time rout, like the worst bond rout in 800 years. The NASDAQ is falling apart. The Hang Seng is falling apart. The SPY is falling apart, and they're trying to keep things up. They're trying to prop things up and make it a slow, slow impact, fucking slow downturn. That's not going to happen. The economy contracted.
A slow train wreck.
A slow train wreck, pretty much, is the best way to fucking put it. The American economy contracted 1.4% on quarter in the first 3 months of 2022, well below market forecasts of a 1.1% expansion, following a 6.9% growth in Q4 2021. What happened to the 6.9% growth? It was all fucking fake. It was all government spending and people spending money with their stimulus. That's it. It was hyperinflation that is being caused via the artificial printing of money. Plain and simple. Now that that's gone and tapering's happening, we have a 1.4% contraction in the economy, which is way before 1.1. Contracted means down, okay? It means down. It doesn't just mean like less. It means like negative. You see that? Negative. What happened in 2020 when we went negative 1 month? We went to negative 31 the next month. Except right now, the government is still frantically buying $40 billion worth of mortgage-backed securities at the same time as they're selling $90 billion worth off their asset sheet. So they're buying back 45% of their asset sheet every single month. Because if they don't, the stock market will collapse in a heartbeat. The real estate market, I take that back, the real estate market, mortgage-backed securities, the global real estate markets, and the stock market, and our economy would collapse in a heartbeat if the government stopped buying back that $40 billion every month right now. That's why they continue to do it. And they're going extremely slowly in this downtrend of selling off assets. When you take all of that shit and you combine it, and then the June 3rd executive order, the fact that the options chain is artificially wiped and cleaned right now, you should know that if your TSP is unavailable from May 16th through first week of June, and the stock market crashes, you'll be unable to sell to save your savings. And if the stock market moons on certain stocks and ETFs that you have, because IWM, the ETF, might skyrocket, or XRT, the ETF, might skyrocket, and a lot of those ETFs will cause the stocks within them to skyrocket, such as AMC and GameStop, because all shorts have to close or cover in a margin call or default situation. So when margin calls go out due to these executive orders like they have in the past, if it happens on this time frame of this approximate 3-week period, nobody that has their money locked up whether they're in the federal employee, whether they're a federal employee or whether they're military personnel, they will not be able to sell for profit or sell for a loss or to prevent losses. That is a scary thing for me, and I'm not even invested in that.
What a coincidence.
What a coincidence, right? You know what else a coincidence, bro? Remember, let's see, how we just talked about Deutsche Bank?
Oh, yeah.
Deutsche Bank headquarters is searched over possible money laundering. And a whistleblower, let's see, coincidence. This was April 29th, 2022. What else is coincidence? The United States federal informant who turned over Deutsche Bank files was found dead. This article was 16 hours ago. Coincidence, huh? He got Epsteined. Valentin Brockschmidt, a reputed federal informant and whistleblower, went missing after he was reported to have turned over insider files about Deutsche Bank a year ago. The out-of-work musician had allegedly agreed to help the FBI investigate ties between Donald Trump and the bank. Beyond giving documents to several reporters, Brockschmidt sold some to Fusion GPS, the company that had earlier produced the infamous Steele dossier, written by Christopher Steele, the British MI6 spy, who had determined that in 2006, Russia poisoned its own ex-agent Alexander Litvinenko, and who had put together the file about then U.S. presidential candidate Donald Trump's ties to Russia in 2016. Brockschmidt, age 46, was found dead at a Los Angeles school this week after having been missing since April 6th, 2021, Sergeant Rudy Perez of the LA Police said. Please mute your mic, guys. They believe he was homeless. There was no word as to what relationship he had with the school, if any. What the fuck would he be doing there? Why would this fucking guy be at this school if there's no known relationship with the school? I figured NBC probably would have called Woodrow Wilson High School and asked, but there's been no word. That's where his body was found. That just sounds too easy to me. That doesn't sound like a coincidence at all. Tinfoil hat. Jesus Christ. Heaven help us. Heaven help us from the Clintons and the CIA. This is disgusting.
Hey, yo, boss.
What's up, bud?
Yeah, you seen this thing about the haircut on government agency issued MBSs?
Show me. If you said haircut and mortgage-backed securities in the same sentence, I may have an erection.
Starting Monday, the 2nd of May, there's a new rule coming out that says that mortgage-backed securities issued by Ginnie Mae, Fannie Mae, Freddie Mac are getting 100% haircut.
100% haircut? Put that in ape chat for me. I don't believe you. I want to believe you, but I don't believe you. Let's see it. Let me show the receipts to these folks, because those are some bold claims, brother. And I trust you, but I want to see this with my own eyes. Grandpa Barney, boss, my brother six-pack on Grandpa. Thank you for being so passionate and hardworking for all of us. Thank you, brother. I'm definitely going to get a six-pack thanks to you. Appreciate you guys.
Pam, you were an angel. We love you.
Pam says, we're going to be so fucking rich. Thanks for holding, everyone. Appreciate you and the think tank crew. Thank you, Pam. You're too kind. Make sure you guys hit up Pam the Realtor, #1 Realtor in Cali, SoCal to be specific. And that was not a paid sponsorship. I just thought I'd give her a shout out because she is an awesome realtor. I've seen her at work. While Pugs shows us the link to that, take a look at the NASDAQ high yield bond ETF with the spider in orange. What do you think happens next? The orange line catches up to the white line. Pretty simple, right? Pretty simple. Hang on, let me go to Ape Chat. I want to see that link really bad. If you said haircut and mortgage-backed securities, ooh, I almost don't fucking believe it, man. It sounds too good to be true. You know what I'm saying?
Oh yeah, brother. I took a minute while you were talking about some other stuff to try to really understand this before I said something. But if I'm decoding what everybody put on this shit, it is hitting Monday, and yeah, all these MBSs by a government-sponsored agency are getting whacked, just completely schwacked out.
Man, you guys have been going hard. There's a lot of fucking due diligence in here. It's great. Yeah.
Damn, boss. Looks like you have to scroll down.
It's a like button for all that good DD.
Yeah, it's 30 minutes earlier, boss. We've got a
Pantheon.
link in here regarding collateral haircuts.
There it is. Thank you.
My time says 7:58, so that would be for you. I guess that'd be. Would that be 9:58 your time? FJB Pilot NC was the poster.
Thank you. 1 second. I see it. Thank you, guys. Well, it's a good thing it's a PDF file. Pam said we're going to be so fucking rich. Damn, you guys fucking know it. Oh, it's like Dr. Burry, right? Michael Burry. When you know you're right, you don't mind if people think you're crazy. Because they don't understand. And that's all right. You could try to explain. Certain people aren't going to understand. Certain people don't want to understand. A lot of people are happy believing that the government cares about them. Whoa. Beginning May 2nd. What the fuck's going on here? Beginning May 2nd for settlement date May 3rd, 2021. The DTC will update the list of current lenders to joint DTC and NSCC committed 364-day line of credit facility with a consortium of banks. I don't see anything here related to a haircut. There it is. There it is. Holy shit, what's going on here? But it only is... In order to align the collateral value that DTC assigns to lender FIS with the LOC agreement as part of the DTC's risk management controls, DTC applies a 100% haircut and assigns no collateral value to any current or future lender FIS held as net additions in a participant account.
Yeah, check page 3 on that appendix. You'll see all the GIS stuff.
So here's the percentage of the haircut collateral that's being taken. 2% for 2-year, 3-year swaps, it looks like. And then 5 to 10 year are losing 4%. Let me scoot this over in case you guys can't see it. Oh, bummer. I'm going to have to just go like this. There you go. 12% for remaining terms to maturity in excess of 5 years. This is a lot. And then mortgage-backed securities issued by a U.S. agency and a U.S. government-sponsored enterprise. All other government-sponsored enterprise not under U.S. government conservatorship are being downgraded from, anything between AAA to AA and AAA to AA2 is going to get a 7% collateral haircut. That means it's going to lose 7% of its value. And then any mortgage-backed securities issued by a U.S. agency and a U.S. government-sponsored enterprise that are rated below AA2 and AA are going to get a 100% collateral haircut. And all other government-sponsored entities not under a conservatorship are also going to get a 100% collateral haircut. Now, Pantheon, correct me if I'm wrong, but does this not mean that anything that's not a grade A, primo, top-notch, top-of-the-line, top-tier mortgage-backed security going to be worthless?
It'll be worth a lot less than they paid for it, as far as terms of collateral.
Well, if it's getting a 100% reduction in collateral value, that would mean it would lose all of its collateral.
Oh, right. Sorry, I was scrolling through that myself on my
you're
own
fine.
monitor. Yeah, you're right. Where you are right now, 100%.
down
That's
here.
right. It's worth $0. Correct. You got it, boss.
This is big news. This is big news.
How accurately have they actually rated? It depends on how accurately they've
Well-
actually rated them, but you're 100%, my man.
Here's the good thing is that the rating agencies didn't know this was coming, in my opinion. And as of April 29th, 2022, the DTC is showing us that beginning May 2nd, which is Monday, anything for a settlement date of last year will update the list of current lenders committed to a 364-day line of credit facility with the consortium of banks, the line of credit agreement.
Footnote number 2 on this document says the DTC may reduce its risk by assigning higher haircuts where applicable to equity securities designated as highly volatile based on their historical price volatility. Where else are we seeing mentions of reducing risk? NSCC 2022-003 and 801. We're just seeing repeated pieces coming in of the DTC, NSCC, both under the DTCC, concerned about reducing their risk. It's on the very last thing, last page, where the footnotes are.
Yeah, sorry, I'm just looking at all these. That's a lot of fucking haircuts.
Yes, it is.
The
Isn't there
DTC
gonna be a
is
margin
not
call
fucking around. Okay, everything we just said in this stream for the last hour and 16 minutes just got multiplied in severity by this document from the DTC filed today, April 29th, 2022, that I didn't even fucking know about till about 5 minutes ago. Are you seeing? Is everybody that's watching right now understanding the level of manipulation and heavy-handedness that is happening right now via the SEC, the DTCC, the NSCC, the Fed, the White House, and all of these other government entities and regulatory bodies in order to finish this, to get this market to where it needs to be? And that they know that it's significantly overvalued. They know that it needs to crash, and they know that the shorts have to cover and close out their positions.
Can someone remind me what's on the Fed balance sheet?
$9 trillion worth of assets, including $2.9 trillion worth of mortgage-backed securities and $2 trillion worth of naked shorts on the VIX.
The liquidity crisis is worse than we thought.
We're gonna be
And
so
since you love
fucking
coincidences so much, this goes into effect as of executed trades for, it says what, the 3rd? 1 week after that is the first set of NSCC, SEC public comment rules I've ever seen have less than a 30-day period. A week, so the next day on the 4th of May, one of the two rules, I forget if it's 003 or 801, comes out of comment period. And on the 10th, 1 week after the 3rd, the other one comes out of comment period. Less than 30 days of comment on those ones to reduce NSCC risk. Here we have something coming into effect on trades for the 3rd to reduce DTC risk.
Look at this.
Coincidences, guys.
That's not a coincidence at all, dude. That's not a coincidence at all.
Not at all.
On top of that, collateralized mortgage obligations, anything that's not that all government-sponsored entities they're all going to get a 20% haircut, and anything with 2 vendors attached to it is going to get a 100% collateral haircut. What does that mean? They're getting rid of hypothecations.
A margin call will happen way sooner.
Way fucking sooner. Look at this. Medium-term notes and corporate bonds, everything rated CCC plus, CAA1 below, issued by a corporation other than a supranational, is going to lose all of its collateral. What does that mean? A shitload of Chinese developer bonds, a shitload of other collateral, OTC pink sheet garbage is going to be worthless. Even the B plus to B minus and B1 to B3 rated shit is going to lose 50% of its collateral value. This is huge. This is huge. Municipal bonds, everything rated under BB plus is going to lose 100%. That's huge! Huge! You guys don't understand the amount of fucking bonds out there. Trillions of dollars of these bonds exist right now. Trillions. This market is gonna fucking crash without a doubt. If I didn't think so 10 minutes ago, I sure as fuck think so now.
And most people have no clue how much debt their local municipalities actually carry. And who are they going to try and get that money from when they can't? Yeah, this is big.
From we the people. The same ones they always take it from. We the fucking people. We're going to be so fucking rich by executive order of the fucking president.
You know it.
Jesus.
You're a genius, man. You have live DD breakdown. Not many people can do that.
Well, thankfully, I've got guys like you and Pantheon and the rest of the think tank here to back me up. So that is awesome. Awesome. Incredible, incredible shit. Yeah, we were literally breaking down this brand new fucking DTC collateral haircuts that was just released today. That is why I love you guys in the think tank. You are fucking awesome. Pugs and my man over here, FJB Pilot, thanks for posting that up, because that is some serious good news for people that have opened their eyes, and it's really bad news for Citadel and for Virtue, Susquehanna and State Street and all these other assholes that are ridiculously over leveraged. That's for sure. I cannot state enough how happy I am to see this right now. This limits the aggregate amount of covered transactions between a bank and any single affiliate bank. Among other things, a bank acceptance of securities or other debt obligations issued by an affiliate as collateral security for a loan or extension of credit to any person or company. Oh, margin calls are coming for sure. Margin defaults are coming for sure. Lloyd's of London is already fucking screaming from the hills, from the rooftops about the losses that they're undertaking. What do you think's going to happen after this? This is big news, guys. I'm excited to say the least. Look at this. Canadian dollar. Sinead and Dennis Ryan, thank you guys. I appreciate you. Appreciate your support. Jay Trader as well. Thank you very much, Gorilla Knuckles. Join the think tank, brother. There's a link in the description. It's a Discord. It's a Discord community that we have going. Link is in the description. It's free to join. Never ask you for money. Never ask you for anything. All we do is share information. It's and it's a fantastic place to be if you want to join us. Look at these medium-term notes and corporate bonds, dude. Municipal bonds, money market instruments. Jesus, everything, even A-rated instruments. You know, A- rated instruments, commercial paper discount notes, things like Evergrande bonds, Shimao, worthless, gone, dunzo, no longer available, gone, 100%. Wow. If Dr.
Equity
Metzler doesn't kill
securities.
them, this will. Go ahead, brother.
Equity. Go look at the last page, boss. Equity securities not listed on a U.S. national securities exchange, NASDAQ, or Canadian securities exchange with a market price below $5 per share or other unit is 100% cut. Would that not be everything on the OTC?
It's all the Chinese developers.
And they completely screw around with the OTC market because
Holy
there's
shit,
no
I'm gonna
oversight,
cry.
right?
Oh, that's
all of
amazing.
that's completely gone.
It's like Christmas. Look. They're worth Agile Group $4.20, Shimao $6.40, Jinming 4 cents, 7 cents, 4 cents, $1.60 for Evergrande. Oh, and I forgot to state, this is in Hong Kong dollars. So in US dollars, this is about a quarter. Okay, so this one here that's about 4 cents. Yeah, that's about a fraction of a penny. Okay, so yeah, Sunak, CSI, Hobson, all of these guys, Logan Group, Shinsun, shitloads of Chinese of equity securities listed on the U.S. National Securities Exchange or on the NASDAQ or on Canada exchanges. Anything with a market price below $5 is losing 100% of its value. Pantheon.
And the Canadian banks bought into those too. The Canadian banks bought into them. That's gonna you're onto it.
And okay,
go ahead, sir.
I know the answer, but you explain to people why would the DTC make all of this collateral now at this point in time to take effect here on May 2nd worthless?
I'm still struggling to figure out the timing of this thing because we're basically seeing a larger scale, better use than the executive order on.
Yeah, that's what I'm thinking.
A lot more stuff here.
That's what I'm thinking. Do you really? I don't want to get ahead of myself here, but when I see this, everything I see here, I won't be surprised, and I will be the first to say it. I wouldn't be surprised to see if the market started crashing, like seriously, market fucking crash collapse on Monday, May 2nd, 2022.
You know, Froggy Styles was doing a technical analysis on his channel today, and he was looking at that as well, saying Monday and Tuesday don't look good, right? Just as from a TA perspective. I mean, we approach this as apes in our community all together from so many different sides, and I'm telling you, so many different things are converging on a time period that looks extremely interesting, and I'm downplaying that.
Yeah, they made this such a short turnaround. Maybe they're trying to catch people with their pants down. Don't give them a chance to react.
That's exactly what I think.
Don't give them a chance to mark their positions and hedge out.
I mean, we're already hedged, right? So
and they reduce they
pretty, but
maintain the ability to assign higher haircuts where applicable as they see fit.
Do you guys watching at home realize what you're witnessing? Whoa. Look at this. American
I think I know what this spells.
Hang on, let me share my screen just since I'm
Cash says his best.
Emergency!
American Depository Receipts with a market price below $5 per share are going to lose 100% of their collateral value on Monday. I need some water. Holy shit.
This is Jeremy Irons staring out the window in margin call going, I can't hear a fucking note, you know, from that movie Margin Call. That's him. That's this in my mind.
Guys, I'm going to skip the water and go straight to beer because cheers, motherfuckers. We're going to be so fucking rich.
Man, I wish I could drink a beer at the moment.
That laugh of yours is one of the sweetest sounds. I want to hear it.
I am jacked to the tits. We're gonna be so fucking rich.
Holy shit.
Boy, I want to work here. I mean, what are you doing for me? The tips are finishing.
Hold up. I think I heard tea.
All I know is I'm struggling not to cry right now. This is hard. This shit is huge. This shit is fucking huge.
T, can you repeat what you said?
We're gonna be so fucking rich.
Yeah, my man.
No idea.
God, you're so right, bud.
Hell yeah.
Dude, I think our fucking time is here. This is absolutely insane.
Let's fucking go.
Holy shit. This is like a dream come true. This can't fucking be. I can't wait for Monday. We're going to be so goddamn rich.
Is it Monday yet?
Oh no, but I got to play the song. Because I need a minute.
This dramatic silence is here for a reason, folks. Clearly, we're going to put a lot more time into this weekend.
Okay, 3, 2.
This is something that needs everyone to put a set of eyes on this, please. And let's double check and triple check our work here. But
yeah, no doubt.
Having a moment of silence with the market.
Yeah, let's have a moment of silence.
R.I.P. to the hedgies.
Now, okay, this is a 7-page document. Now, Pantheon, I agree.
I just wish more family and friends would listen.
Pantheon, I agree with everything you just said, bro, but this is a 7-page fucking document. The fucking lot of us, like all 99 plus of us, or however many are in this fucking chat right now, just went over this fucking thing. I can read English clear as day. And this says that beginning May 2nd, that for the settlement date of May 3rd, the DTC will update the list of current lenders to this committed 364-day line of credit. And then please see a list below. It tells us the issuer bank listed in Table 1, pursuant to the agreement, and the securities issued by any affiliate lender, lender family of securities, etc., are excluded as eligible collateral for securing a draw on the facility. That means they cannot use that collateral to draw on that facility there. In addition, what else is excluded? To avoid running afoul of the restrictions, the LOC agreement excludes lender FIS as eligible collateral. In order to align the collateral value the DTC assigns to lender FIS within the agreement as part of the DTC risk management, they apply a 100% haircut and assigns no collateral value to any current or future lender FIS held as net additions in a participant account. Now, is it possible that this doesn't mean the collateral haircut on the stock market and this is just a collateral haircut for things in that FIS account? You with me, Pantheon? Hang on a second. I just got jumped out. I got no audio over there. Hold on. No audio with the think tank. Let me reconnect with them. Come on, Discord. Do your thing. She's struggling. She's struggling. Did she make it, Discord? No? Yes? No? Maybe so. Can you guys hear me now?
Yeah, there you are.
That was fucked up. But anyway, hey, Pantheon, I wanted to ask you. This says here, excludes lender FIS as eligible collateral. Is this... This is, attention, settlement manager, managing director / cashier from DTC Risk Management, and the subject is changes to DTC collateral haircuts. So this is not just for particular lines of credit, right? This is just in general from what I'm reading, right?
That's what I'm seeing at our first glance here as well. That's what I'm seeing, boss.
Okay. I want everyone to be aware that we have read this multiple times. We don't want to make any promises, and because nothing's a guarantee. But from the looks of it, it looks as if the DTC is applying a 100% haircut and assigns no collateral value to any current or future lender FIS held as net additions in a participant account. For all of these lenders, and it's everybody you know, from JP Morgan to B of A, Bank of China, Royal Bank of Canada, Nova Scotia, Wells Fargo, and the list goes on. Credit Suisse, State Street, UBS, HSBC, Lloyds Bank, all of the top players are taking a huge collateral on haircut. A collateral haircut on these assets. U.S. Treasury securities are taking a small haircut, 0 coupon, but mortgage-backed securities rated below AA, which is probably 90% of mortgage-backed securities, are getting a 100% haircut. Ferrari Boy asks, boss, does this possibly mean to start running next week? If you guys want my honest opinion, no. I think that this means that the market will start crashing even harder in the next several weeks. And as we get closer to the June 3rd order, just like on January 28th and on May 27th, when those executive orders were coming into play, couple weeks before then, the stock prices on our favorite meme stocks started going up little by little by little, stair-stepping and stair-stepping. You could see the delta hedging. You could see people FOMO buying in, the fear of missing out. Retail started piling in. The volume started climbing up. Dark pool and lit exchange orders started climbing up. Gamma started to occur, and gamma squeezing.
Gamma, baby.
Gamma, baby. Deep out of the money options. I fucking love them. People that tell you that out of the money options are bad for the stock don't understand the stock market. Deep out of the money options cause gamma. They cause delta hedging, and that is why the market makers have artificially wiped the end of May through the beginning of June open interest on AMC and GameStop, because they bought it all up for themselves, because they know the fucking market's going to crash. AMC and GameStop are going to fucking tank, and we're going to be able to buy options at a great fucking price. And in my opinion, my non-financial advisor opinion, those that do are going to get filthy, stinking, fucking rich. Your fucking broker's going to be calling you, begging you to sell them your fucking calls. Begging you.
Yeah, man. Fucked up.
Talk your shit, boss. Talk your shit.
Dude, the market crash is here. It's here to stay. It's not fucking going anywhere. The perma bulls, Marcel Kalinovic, pull your head out of your fucking ass. You twat. Fuck. Look at this. All of these mortgage-backed securities, 100% fucking reduction. Whether they're owned by the government, whether they're not owned by the fucking government, anything rated below AA, 100% fucking haircut. 100%. The market's going down. They're setting it up, and they're sadly setting up federal employees and military personnel with a TSP, a thrift savings plan, to lose their fucking gains on their meme stocks and their investments, or to lose their fucking money if theirs are invested in emerging market funds like Chinese collateral. Get the point? You see what's happening now? Deep out of the money calls cause gamma. Deep out of the money calls cause gamma.
No options, no gamma.
No options, no gamma. Deep out of the money calls cause gamma. I plan to exercise approximately 1/3 to 1/4 of my options after I sell the other 2/3 to 3/4 of my options for ridiculous amounts of premium to the market makers.
Yeah.
And what does that do?
I just
Exercising causes further gamma and delta hedging, because now they have to fetch. They have to go fetch the shares to deliver on my calls that I just exercised, that the fucking market maker never had. That's going to cause a further run up in pricing. And that's going to cause more fear of missing out in retail investors and day traders and volume traders. And they're going to pile in, and they're going to buy calls, and they're going to shoot the price up even further on calls and shares. Then we're going to have companies like Evergrande and Fantasia and Modern Land defaulting and getting sent into bankruptcy. Mortgage-backed securities becoming even more worthless. The real estate market in America and in China, worldwide, including Europe, South America, and everything in between, is going to lose a vast majority of its value. The volatility index will probably get close to or above $200 per share on the VIX. The SPY, in my opinion, will probably go well under $2,000 a share on the SPX and $200 on the SPY. The NDX will probably get destroyed even worse. A lot of people are going to get filthy fucking rich if they're properly hedged. And they own puts and calls on things that run inverse to the market, or things that make money when the market goes down. And as it does,
damn it.
At some point, closing of short positions is going to happen. Probably before the market finishes crashing. And certain stocks, like Apple and Amazon, Facebook, Netflix, Google, are gonna tank. Meanwhile, in my opinion, I guess AMC and GameStop, BBBY and BBIG, Sundial, Tilray, Ocugen, Progenity, shit, probably even DWAC, are gonna skyrocket. And if you play your cards right and are pretty good with options, there's a pretty good possibility you could turn a few thousand into a few million, and then a few million into a few hundred million, and a few hundred million into a few billion. And then the precious metals come. You might turn a few billion into a couple few billion. Damn, we're going to be so fucking rich. That's all I got to say about that. We've done an hour and 42, and I could probably go another hour and 42 hanging out with everybody in the think tank and discussing all this awesome shit. But at this point, I don't even want to. I'm going to go hug my kids. And I'm going to get ready for next week. Because this next month, May and the beginning of June, are going to blow your fucking minds.
Let's go, baby.
Let's fucking go. Have a great weekend. Have a great night, everybody. I'm going to sleep well knowing that I'm going to be rich as fuck. And it's only a matter of time.
No goddamn rich.
Thank you to Pantheon. Make sure you guys check out Pantheon AMC on YouTube. Thank you to everybody that joined me, everybody in the think tank, Cash Money. You guys are the best.
Thank you, boss.
Another good show, boss.
Thank you, Triffin.
A great show.
Appreciate you guys in the think tank, everybody. Truly mean that. And everybody that's watching right now. Appreciate all you guys. Nancy, Pulsar, Britt, TMI, Jules, Twilly, Dana, everybody. Thank you for your support. Fahad, appreciate every single one of you. I hope you gained some value out of this. If you learned something, please share. Share with everybody you know. Put it out there. Tell them you want to fucking change your life? Watch this. It'll take you an hour and 45 minutes. If you really want to change your life, or do you want to continue living in squalor until the day you die? Because hyperinflation is going to lead you further and further into fucking squalor. Do something to hedge yourself against the rampant hyperinflation and the printing of money and the abuse by the Federal Reserve and the Democratic Party sending 33 billion more of our fucking dollars to Ukraine.
Motherfuckers.
Pieces of shit. In the name of humanitarian aid? Get the fuck out of here. How about we take the 16 biolabs out of Ukraine that are owned by the Pentagon? How about we do that for humanitarian aid? For fuck's sake. Get the goddamn money printer out. We're gonna be so fucking rich. Holy shit. Collateral haircuts incoming, motherfucker.
Man.
Margin call, baby.
Wow. Have a great night, everybody.
Yep. You speak the truth, man. They want you out, man. They can't take you out, man.
We're gonna be so fucking rich. Get the goddamn money printer out.